Good morning and welcome to the Killik & Co market update. Earlier in the week, market sentiment was largely driven by speculation surrounding the path of US interest rates, but attention has shifted to the volatile banking sector as US venture capital focused Silicon Valley Bank attempts to shore up its finances through a share sale. Recent US economic data has been stronger than anticipated, and whilst inflation has moderated from the highs of 2022, it remains well above the 2% target inflation level, and data releases continue to exceed expectations. The chair of the Federal Reserve, Jerome Powell, addressed the US Congress earlier in the week. He reaffirmed his message of higher and potentially faster interest rate hikes. Markets have been volatile in response to this. Financial markets are now projecting that interest rates will reach a higher peak than previously forecast, and Powell's rhetoric has fueled speculation that the central bank may lift interest rates by 0.5% when they meet later this month. This would represent a sharper hike following the more moderate 0.25% hike in February. Whilst this week's news has certainly led the market to price in tighter financial conditions, it's important to note that we are likely in the later stages of the monetary tightening cycle, and central banks are expected to cut interest rates next year. Interest rates have profound implications for economies and financial markets because they effectively govern the level of money supply flowing within an economy. As interest rates increase, the amount of money supply circulating around an economy tends to fall. Conversely, when rates are cut, money supply tends to increase. The fluctuations influence demand for goods and services, and also financial markets. As you can see in this chart, there's a strong correlation between the level of money supply and the performance of the S&P 500 benchmark. Inflation has dominated market sentiment over the past year, so markets will eagerly anticipate next week's inflation data. Prices are forecast to have risen by just over 6% over the past year. This would represent a moderation from last month's inflation level, and it would be significantly lower than the peak levels recorded in 2022, as you can see in this chart. Whilst the headline inflation rate has fallen in recent months, if you observe the prices of services such as medical care, insurance and transportation, items which tend to change price relatively slowly, the prices of these items has continued to steadily increase over the past year, even as the broader inflation gauge has eased, leading some financial commentators to speculate that we may see resurgent inflation in the second half of the year. UK GDP data was released this morning. A surprise to the upside. The economy expanded by 0.3% in January following the previous month's contraction. The rebound was largely driven by the services sector. Over the past year, the UK economy has been oscillating between expansion and contraction, as you can see in this chart. Sterling has strengthened slightly in response to this morning's positive news, although the pound has weakened against major trading partners in recent months as the economic outlook has deteriorated, inflation remains elevated above 10%, and the Bank of England is expected to pause interest rate hikes sooner than US and EU counterparts. A weak currency can reinforce inflationary trends, given that the UK imports nearly 30% of goods and services from abroad. The prices of overseas items are effectively more expensive when converted from a weaker currency. It's been a relatively quiet week for our coverage, although yesterday Deutsche Post reported a strong set of fourth quarter results, beating revenue and profit estimates. The company is one of the largest postal and logistics providers and commands a strong market share in the UK for its well-known DHL brand. As one of the leading logistics service providers, the company stands to benefit from the rapid growth in online shopping, which still only accounts for around a fifth of overall retail sales, having accelerated by 5% in the past few years alone. Please speak with your investment manager if you would like to discuss this further. Finally, moving to the earnings calendar, Volkswagen will be reporting next Tuesday, followed by Prudential and E.ON next Wednesday and Vonovia next Friday. That's all from us this week. If you have any questions or comments on today's update, please do get in touch with us by emailing info@killik.com. Have a great weekend and we'll see you soon.